Welcome to Becoming Powerhouse, where we discuss the tough lessons I've learned while taking my two companies from negative revenue to over 7 figures. We'll talk about the raw and vulnerable truths about being boss, as well as tips and strategies you can implement immediately for better business results. I'm your host, Nicholle Overcamp, the founder and CEO of Wilcox Financial Group and Powerhouse Coaching. You can see links and other resources in our notes. Don't forget to head over to herhousemoney.com to grab your free Her bundle for business and subscribe to our newsletter. Now, let's dive in to today's episode. This is the conversation that you need to hear, and it might be the one that you've been avoiding because it is all about the numbers to know what to pay attention to. And frankly, the ones you can't ignore, especially if you're looking to grow your business, get more profitable, and truly understand what levers to pull when looking at things like a balance sheet or a profit and loss, cash flow statement. In this episode, I have an awesome conversation with David Worrell, who is a finance guru. He is the CEO and founder of a fractional CFO company, which is huge. A fractional CFO is a chief financial officer. And at Fuse, they offer CFOs, controllers, and accountants who produce financial insights and understanding that you really need to know to grow your business. And what I love most about them is they can break things down into simple terms, and they're huge on education, just like I am through my financial planning company. And so please listen to this one. Don't avoid it and enjoy my conversation with David. All right, my powerhouses, we are here with David Worrell, and I am very excited to pick his brain a little bit and have him share with you maybe the not so sexy but hypercritical parts of business, the things you want to think about, and David, I think you probably run into some similar things that I do on the financial planning side, where it is that one thing when it comes to finances that is super important, typically more urgent than our clients give it credit to be, but no one wants to talk about it because there's so many things that are more fun. So with that intro, welcome.
Well, I haven't ever had anybody tell me that accounting is fun, but I think it can be. It should be fun when you're looking at your numbers, if you really understand what you're looking at, and you have a goal for what you're trying to get them to be. And by the way, fun is in my slogan. We make businesses more profitable, more sustainable, more fun, because they can be fun when you are profitable and when you're bringing home more money every month than just a paycheck. And you can see the value not only of your income growing, but of the value of your business growing. It makes being an entrepreneur a lot of fun. So yeah, appreciate you saying that.
Yeah, I love that perspective. And I say the same thing about financial planning. It's like, this is actually a ton of fun. We have fun with it because taking that perspective and understanding what you're capable of achieving, designing your life, that is probably one of the most fun things that you can think about, but we typically don't correlate the two. So, and for those of you listening, this podcast is going to be one that you will want to save, maybe revisit, maybe even follow up with David. It's not our typical interview because I want to leverage your brain and really talk about some topics that we get asked all the time versus, the traditional journey. And maybe we'll have you back to do that. But thinking about cash flow and financial statements, those things like balance sheet, profit, loss, can you discuss a little bit why those are important and why a small business owner should pay attention to them, look at them, questions maybe they should be asking their CPA if they look at it and say, I have no idea what the fuck this means?
Yeah. Hey, financial statements are the most boring of a boring business, right? So, but they're also the most important. Your business speaks in the language of numbers. And your financial statements are your only chance to really communicate with your business, to get the feedback from the business model itself and to understand what it's trying to tell you, what's good and what's not so good, maybe. You go into the doctor's office, they're going to take your blood pressure and your temperature and your weight and all that kind of stuff. A financial statement is the same sort of thing. Every month or every week, if you want, you can get a checkup on your business to understand how it's going. Am I eating too much sugar, or am I drinking too much alcohol, or smoking too many cigarettes? It's all there in your financial statements. And the more you understand them, and you don't have to understand them at a minutia level, right? We're not trying to make every business owner an accountant. We're trying to make every business owner a management accountant, a manager who can look for those KPIs or those metrics that are coming out of their business and be able to identify which ones are important, maybe which ones aren't so important, do a couple of little simple calculations, and come up with a statement from the business that tells me something about my company that maybe will inform my decisions later this month when I have to make tough decisions like, am I going to hire somebody new? Am I going to buy a new building? Am I going to sell my business and retire? All of those things, from the simplest, should I invest more in marketing or should I sell my company? All of that is available to you in your financial statements and in the trend lines that they paint over time. And it doesn't take a lot to drill into just the top level of that stuff to get a really good understanding of where your business is at and where it's going.
Thank you. I think that's super helpful. And if you were to say, one statement to focus on to really dive deeper into the story of the business, and if you have an example, I think that might be super helpful because again, often you're looking at this,
Yeah.
or I know our clients are saying like, okay, this is really great, and what you just said is awesome, makes sense, but I still don't get it. So maybe there is an example or even questions that you can arm the listeners with to go back to their CPAs to help them educate. Because a big
Yeah.
thing that I talk about and enforce the advocating of is like, if you don't get it, keep asking questions. And
Yeah.
if you don't understand the answers, ask more questions or find a
Yeah.
different pro
Yeah.
who can make it simple, right?
Right. Yeah. And I will answer your first question next. Second,
Yeah.
you said something really important. You said, go back and ask your CPA about this. And I just got to throw out there right now, I don't I don't endorse CPAs. I don't like CPAs. I think when we as business owners, we say CPA, what we mean is my tax preparer, right? Right? Everybody has a CPA who does my taxes, and that's great. But CPAs who do taxes typically only do taxes, and they're not giving you the perspective on your business about growth and opportunity and how to make decisions. They're really concerned about helping you pay less tax, and some of them, the bad ones, aren't even helping you with that. They're helping you pay tax, right?
This
And
is true. Yeah.
right, the best CPAs want to help you minimize tax, and the best way to minimize tax is to have no business at all, right? Just shut it all down and you won't pay any tax. So I look at things completely differently. I'm here to make your tax bill astronomical because you just got so flippin' rich off of your business this year that you actually owe taxes. And then you can worry about going to a CPA and paying them accurately or reducing them with some weird strategies. But the first thing you got to do is earn the money. And so a management accountant is really where you want to go. You want a controller or a really good bookkeeper who understands accounting. And to me, the difference between a bookkeeper and an accountant, by the way, a bookkeeper knows how to run QuickBooks, maybe, but an accountant knows why they're running QuickBooks this way and what the entries mean and how it impacts your financial statements. And a really good accountant or a controller can explain your financial statements to you the way you and I are doing right now. Okay, so that's just a little frame to say, let's not always talk about CPAs because that's generally a tax topic. Let's talk about management accounting. Okay.
Got it. And just real quick, not to interrupt, but I am, uh, that that is a beautiful point. Not all accountants or CPAs or bookkeepers are created equally. There are A students, D students, and everything in between. So it goes back to asking more questions, and we do see it all the time where there's plenty of accountants and or CPAs who are just literally checking the box. They're completely drained, they're understaffed,
Yeah.
and or they're out of practice, or they're not keeping up with knowing the intimate details of your business. And so we say all the time, like, your pros, your finance pros, between CFO or accountant, CPA, bookkeeper, they all need to be coordinating, collaborating, communicating,
Yeah.
so that we're ensuring that everything is happening in your best interest and nothing's getting missed. Because a
Right.
lot of times too, we'll see, David, the accountant or the CPA, rather, I think in the terms that you're using, is they're planning for, like, let's deduct as many taxes as possible this year. Meanwhile, they're not educating you on how you may be screwing yourself over 2 years from now, and how does that feel? And so it's really about that overarching viewpoint as well, where it's great to not pay a lot in taxes, but sometimes it's okay,
Yeah.
and it can actually work in your favor.
Right. Okay, so let's get back to
Yeah,
financial
sorry.
statements. Right? No, no, that was excellent. Let's get back to financial statements. I think there's really just three numbers that people need to know. Even the simplest business, the basic place to start is to know three numbers on your income statement. So remember, there's two basic financial statements that everybody's going to see: your income statement and your balance sheet. Balance sheet, crazy important, and we can talk about that. But on an income statement, most people are more familiar with that. If you know your top line sales numbers, how much money did you bring in last month? Your gross margin, and your true gross margin, meaning after you paid for all of the costs of exactly what you're selling. So I'm selling coffee cups on eBay. I know how much I sold of them. I know what the coffee cup itself cost me. That's gross margin. And then the third number to know is, what's my overhead? What's my total overhead? And overhead means all of the expenses that we have that are not directly related to selling the coffee cup, right? So let me tell you a quick story. I lived in beautiful Monterey, California for a while. And in Monterey, California, there are an awful lot of very wealthy people. Monterey, Pebble Beach, Carmel, all of these little towns that just have, lots of very wealthy people. Let's just call it. And you'd be great out there as a financial planner, lots of money to invest. Anyway, one of my friends started a mobile oil change business because all these wealthy people with Jaguars in their driveway didn't want to drive 10 miles to the oil change place to get their car fixed. So he had a van and he drove to their house and he would change their oil. And I said, that sounds like a fun business. He goes, yeah, but I can't figure out where's all my money. Well, how come I'm not making any money? What's wrong with this business? I said, well, let's look at your P&L, your income statement. And he said, look, man, I'm making $10,000 a month, and I'm only spending $3,000 a month on oil. Let's make it simpler. I think he was charging $75 to change your oil, but he was only spending $35 on the cans of oil themselves that go into the car. He said, I'm making $40 every time I show up. Okay, great.
Yes,
But
but
yes, but exactly right. Yes, but what else goes into the cost of actually doing that oil change? I said, what about the filter? He said, yeah, okay, that's in there. I charge a little more. I buy a $10 filter, I sell it for 20. I said, all right, what about the cost of driving to your location? Well, I've just got this big number down in my overhead. Down below, I've got a big number for automobile expenses. And I track my gasoline and my insurance and my car maintenance and my new tires and my own oil changes and the depreciation on my car because it's not getting any younger and all those things. That's just part of my overhead. I said, I don't think so, man. It's not really part of your overhead. If you drive 20, 30 miles, which is not uncommon out in the Monterey Peninsula, if you drive 20 or 30 miles between appointments, the federal government says each mile is worth 59 cents or something these days. And on a big truck like his, we figured out he was actually burning enough gasoline and oil and tires and insurance that was costing him like 85 or 90 cents per mile. And he's driving 20 miles to get to a customer and 20 miles back. He just spent his $40 of profit on gasoline. And he didn't include his travel charges as part of his cost of goods sold. So that's the number one problem I see with almost every business is we fail to capture the true cost of what we're selling so that we can price right, so we can understand our gross margin, how much profit is left from just the sale. And knowing that gross profit then dictates how big your overhead can be, how big your company can be, how fast you can grow. Everything really in business comes from gross margin, right? Gross profit, how much money is left over after you sell what you bought. And he didn't think he was buying the mileage to go to his accounts. He didn't think about, hey, every time I change an oil, I use 5 paper towels, and I have to wash my uniform, and I have to get my own car washed because I want to show up, beautiful, clean car every time I want to go. I want to get my car washed before I go to a new customer. So all those things that are costs of goods sold, but they get hidden in the process of just doing your work every day. But if you can pull them all out and you know actually what you're spending to deliver your product or service, you're going to know a whole lot more about your business.
Yeah, that beautiful example, and thank you. And it comes up all the time actually in discussions with our clients is when you're a service-based business, it's so simple to forget all the moving parts and costs of business when you aren't client facing and adding that into the price and making sure that you are priced right. And to even take it a step further, what we see a lot, and you probably do too, is clients where they're not factoring in their highest quote unquote ticket might be their least profitable because of all the extra time and resources that it takes on the back end. And so knowing these numbers, understanding them are literally make or break between you staying in business.
Yeah, it really is. Another quick example, just to put this in a different perspective. If you're a manufacturer, like I had friends who would go to China to make some really simple little widget, right? The coffee cup or the computer mouse or something, and they would have to pay $25,000 or $30,000 for the mold, the tool they call it, to make that product. Well, guess what? That tool is only good for 10,000 runs, and then the tool runs out, it breaks, or you have to replace it. You've got to amortize. I'm going to use some big words. I'm sorry, but you've got to amortize the cost of that tool across the 10,000 units that you can produce. So anytime that you've got anything in your business that's consumable, when you sell something, it either goes away over time, or you sell it directly to your customer, or you use it and discard it during the process of selling. All of those things need to go into cost of goods sold and get subtracted from your sales in order to give you gross margin.
Mm-hmm. Yeah.
And then, are you ready to take this one step further?
Let's do it.
All right. So the second big thing that every entrepreneur has to know is break even sales. How many oil changes did my friend have to do before he could pay for his car insurance or his own salary, right? He wanted a salary of $5,000 a month. How many oil changes do you have to do to cover that? And it's not just your own salary, right? It's that whole ball of wax called overhead expenses. Your salary, you have other employees that are not directly related to the sales that maybe you're covering their salary. It's electricity to keep the lights on in the office, rent, business insurance.
Your CFO.
Your CFO, please. Yeah, make sure you put that line in there.
Yeah.
So calculating your break even is the second most important number that you've got to know. And you calculate break even with a really simple formula that at first is not going to make any sense to you, but I promise you the algebra is correct. Your overhead, total overhead expenses, divided by the percentage of gross margin that you earn on each sale. So we already talked about what gross margin is, right? What you sell minus what you paid for the goods that you're selling, including the mileage to travel there or whatever. and express that as a percentage of sales, and take your overhead divided by that percentage. So it might be a big number. It might look funny. It'll be, I spend $17,000 a month on overhead divided by zero point 0.3, which is a 30% gross margin. So 17,000 divided by zero point 0.3 means I've got to sell $52,000 worth of coffee mugs before I can pay my $17,000 worth. So overhead divided by margin, gross margin as a percentage. Remember, percentage is 0 point whatever the percentage is, 0.3 is 30%, is going to give you your top line target for break even sales. And if you sell exactly $52,000 worth of coffee mugs, your net profit, your bottom line, is going to be break even. Means, Nicholle, you're going to make money during that month? Zero, right?
Nada.
The accountant's favorite number. just broke even. I made zero extra dollars. So,
Um,
yeah.
yeah, that's great, and especially for those of you like estheticians, beauty industry. A
Mm,
lot of the time that comes up where you forget how much product, or are you measuring product per client
yeah.
that you're utilizing. I think in that industry especially, it gets overlooked often. It's just a dab of shampoo, and it's
Yeah.
really getting super specific about this stuff, because then it again helps you reverse engineer into the pricing so that you're doing more than breaking even. Worse, hopefully not in the red, but you want to profit. And
Yeah.
so I know this is a question probably that some of our listeners are thinking, David. So for someone who owns a private practice, she's a therapist. She's like, well, I don't have product. I'm not selling anything that is tangible. How do I use that formula?
Right. So, I mean, I have the same problem, right? I sell accounting
Totally
mostly
see
by the, yeah, mine mostly by the hour, right?
Yep.
So, as a service industry, our cost of goods sold is absolutely the cost of the employees who are providing the service, the estheticians, the accountants, the wealth planners, whatever they are. If you pay them a salary or by the hour, their their salary, their wages are cost of goods sold. And then, what else? Like, for us, it's benefits and taxes that we pay on their wages. So I look at the entire, I call this the loaded salaries, or the loaded wages, the loaded cost of human resources. And then so that includes benefits, PTO, right? If you're paying somebody $30 an hour, it's not just the $30 an hour during the time that they're working, but you're paying them $30 an hour on July 4th and January 1st and December 25th also, right? So you're loading all of those costs back on, and then recalculating kind of an hourly rate for those people to know what your cost of sales is and what your pricing should be,
Mm-hmm.
right? It's astounding to me that my loaded cost of goods for an accountant is $60 to $80 an hour. I mean, that's not what I pay my people, and my people would laugh if I said it cost me $75 to keep you in your seat.
Yeah.
But they've each got a computer, they've each got insurance, they all pay. I pay taxes on all of them, FICA and FUTA and unemployment and all that stuff. So when I add all that up, it's more like $75 or $80 an hour. And now I know I can't sell my accounting for $65 an hour if my accountants are costing me 75 or 85. And believe me, I tested that theory and I tried. when, when I was just starting out, I was selling accounting for $45 an hour, and I couldn't figure out why I wasn't making any money. And then I realized, well, I mean, there was a lot of problems at that point. But you've got to load your cost of goods sold for everything that has to do with your people now.
Such a good point, and it's forgotten all the time. There's the what you say you're paying your employee, but then the cost of that is so much more, between payroll
Yeah.
taxes, your payroll company, workman's comp insurance, and all the benefits. And so there's oftentimes calculators that you can use to help solve this. But often when we say, "Can I afford an employee?" we think $20 an hour, right?
Right.
Not the real cost of the 30. And so thank you for bringing that up, because it is definitely something that I think is overlooked, and then calculated incorrectly or and misjudged where it really is bleeding into profits. And then doing that same thing for yourself as the owner, if you are paying yourself a salary, include that, because as the owner you get the salary and then the profit. You want to pay yourself, or would you're shaking your head, so you're like, no, 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 don't do that. But I sometimes will include that in terms of, depending on the size of the business, if it's just one person versus other employees, in what that looks like. So I'm going to stop talking because you're making all sorts of faces over there for
Oh,
those of you who can't hear.
I
So
love this. I love this topic because
yeah.
pay yourself first has got to be the most important rule to being a business owner, right?
Okay, thank God. Okay.
Oh yeah, yeah. Believe me, I know way too many people that work very hard
Yeah.
for no money at all because they forget that their salary is a reasonable and normal expense for the business.
Yeah.
And in fact, there's a horrible statistic I've heard. I think it must be true that the average entrepreneur in his lifetime, her lifetime, uh, earns 35% less than their neighbor next door who works for the man. You know, they get up every day and they go to a job and they got this salary paycheck. Meanwhile, I'm creating jobs, I'm being creative, I'm inventing new stuff, and I make 35% less in my lifetime than the guy next door. And I probably don't have a pension, and I probably don't have health care and all that other stuff on top of that, right? So I live a more dangerous life also.
Yeah.
Okay. But if you believe that your salary is important, that you like to eat more than rice and beans every month, and that you like to pay your rent and you like to drive a car, you need to put your salary into the budget on day one, even if you can't afford to pay yourself that cash. You need to see that line item on your P&L that says David's expected salary is $5,000 this month or $25,000 this month, whatever your expectation is. Put it into the P&L and show yourself how far behind you are to give yourself that kick in the ass that says go out and make a little more money. Because if your salary is not in there and you're only looking at the net profit, and you make $4 or $5 or $10,000 of net profit, and you think, wow, I had a great month, I made $10,000 net profit. Yeah, but that was before your salary, number one. Number two, the business deserves to get paid, and making a net profit is the business's wages. In other words, you're going to turn that $10,000 around and you're going to reinvest it into your business. So it's not really your wage. It's the growth capital that your business has created that it's going to need to survive. So net profit is not the same as personal wages. Budget for your personal wages and then look at net profit and
Yes.
celebrate when you can pay both. Yeah.
Yes.
Huge,
And
right?
that, my friends, is the distributions on top of your salary that you're paying yourself, or dividends, depending on how your company is set up.
Yeah.
And so, big deal. You have to pay yourself first, and if I had my way, you'd also be saving for retirement along the
Yeah.
way through your business too.
Yeah.
And putting all those costs into calculation. And I don't know the statistic off the top of my head. I should. You may, David, the number of business owners statistically who say my company is my retirement plan, and they don't diversify other savings and assets. And what if your company doesn't give you what you think it's worth when you're ready to cash in your chips? And many small business owners inflate that number quite a lot
Yeah.
than what the open market will give them. And we're actually seeing this huge problem right now with the baby boomers who want to retire, and they simply can't, because number one, they can't afford to. They can't find a buyer or a successor, or who they thought was going to be their competent successor didn't work out, because these younger generations are questionable at best sometimes, when it comes to comparing work ethic, understanding, again, back to that statistic where so many entrepreneurs bring in less than the guy or gal working for the man. Most people fantasize entrepreneurship and say, I want freedom and I want to make all this money and work remote from a beach. And it's like, that is a beautiful, but that is also the unicorn that happens after sometimes like many 80-hour weeks and getting to that point. And so, as a business owner, you must think about in addition to the company that I'm growing, building that will be profitable, do I have other resources that I'm saving for along the way, and not overlooking that as far as insulating yourself from potential financial catastrophe,
Yeah.
down the road.
So let me give you both sides of that argument. I learned something just a few years ago that was astounding to me, but the math has always been there right in front of my face. I just never did it. So I mentioned the balance sheet. There's some really easy math you can do on the balance sheet to tell you your return on invested cash into your company.
Ooh, I love
So,
this. Yep.
yeah, this is really cool, right? So, if I take what this is saying is if I take $500 and I invest it into the bank today, I can get 2 or 3% interest on my money if I'm careful. If I take $500 and I put it into the stock market, I don't know, Nicholle, what do you tell your clients you can make in the stock market? Overall, in general, 10, 20 years from now, will you have a return of
We always say on average 8 to 10%.
8 to 10%, right? So you're thinking, wow, that's 2 or 3 times better than a bank. That's cool.
Mhm.
I don't know what's maybe better than the stock market. Maybe like real estate. You could find a really cool investment fund or a really cool short-term rental. Maybe you can make 15 or 20% on your business. I mean, on that kind of an investment. Or you could take that $500 of net profit and you could put it back into your business. What do you think the return on investment is for a reasonably well run company that you own? For you as the business owner, your return on investment should be at least 50%, 50. And I have clients who are doing 150% return on investment every year. If they put $100 into their business on January as an additional capital, right? I've got a business plan.
Mhm.
I know where to spend this money. I'm going to hire another accountant. I'm going to put more money into Google Ads. I'm going to open a second shop for my nail salon, whatever that is. You need a business plan. You need a good way to spend the money. But if you put $100 in on January 1st, by December 31st, you will have generated $150 of profit, and the next year and the next year and the next year, you will continue to generate $150 every year. So you take your P&L and you come all the way down to the bottom, and we've said, okay, we know where our break even is. We're going to do better than that. We start making enough money to pay ourselves, and then we start making this money. And Nicholle says, that's distribution. And I go, yeah, you can go out and buy a Jaguar, or you could think of a way to put it back into the business and get 150% return on it. So that's when we talk about fun and exciting and
Yeah.
the joy of business ownership, that's where it is when you can see that I could take that extra $100 and I can turn it into 150, 300, 450, $600 over the next 5 years.
Yeah, and just to take that point a step further, in an example, I was talking to a client and we were working on numbers the other day, and she said, "I need to make more money, but I cannot cut any more expenses. I'm super lean." And often that's where we go. And I said, "Well, you are lean. There's nowhere to cut. Like, you don't have an expense problem, you have a profit problem." And so I asked, do you have more capacity? Do your people have capacity to take on more clients? And she said, yeah, absolutely. I said, cool. What are you spending money on right now that is getting you the most leads that convert to clients?
Yeah.
And it was Google Ads. It was her actually lowest marketing expense. So we cut out all the other bullshit. And I said, why don't you double down on your Google ads, triple your ad spend, increase your funnel, and you'll make more profit? And it was converting the thinking to actually spending to make. And then I said, you can take that profit, keep it for your increased income you want to pay yourself to sustain the lifestyle you need and want to live. And then I suppose want, not need, but want and desire for your hard effort, and then take the difference of the more profit that you made and continue to reinvest it in the company,
Yeah.
because now you're rolling. And then
Yeah.
after you get to a certain point, then you can increase capacity should you want to. And so, it's kind of changing that thinking there. And again, looking at the cash flow story and the numbers and saying like, well, where are your most profitable clients coming from, and what does that look like? And it was like this light bulb moment where she's like, oh my gosh, I didn't think of spending more there,
Yeah.
and all the areas that we were looking at. So thank you for bringing up that point. I think it's brilliant.
Yeah.
And I mean, all of this stuff is, and you are definitely a valuable person to have in your back pocket to help increase all of the things that you want to do with your business on the good, fun, sexy side of it.
Yeah.
So, and can you share when, I am a small business owner, I'm starting to feel like things are rocking and rolling. I don't know what my next professional hire should be. I may be over delegating to a bookkeeper that doesn't really help me. They don't explain anything. They're miscategorizing things. What kind of questions do I ask? And now, who do I need in my business? What's the difference between a CFO, a controller, a bookkeeper? Questions to ask. What do I is a growing, evolving business? Who should that team be
Yeah.
that's supporting me financially?
Right. So think of a really large business first, right? I mean, everything scales down for small companies, but big companies have it figured out. And so in a big company, you have what they call them clerks, but I call them bookkeepers. They're people who know how to make transactional entries. And they don't have to be particularly bright. They don't have to have a lot of accounting knowledge to sit down every day with a stack of invoices and enter the invoices into a form, which goes into an accounting software, right? So if you're doing the same thing over and over again, that's a bookkeeper. If you're looking at the bigger picture and you're trying to make sure that the numbers are correct, that's probably an accountant or an accounting manager. Somebody who even oversees the accountants is called a controller. So we're getting from general to more specific, or from less talented to more skillful: bookkeeper, accountant, controller, and then CFO kind of sits on top of that pyramid. But CFOs don't always get involved in accounting at all. CFOs are strategic, they're decision makers, they are resource planners, they're people who can bring in banks and investors when you need it, who can talk about the big ideas like, should we go buy that building? Should I buy a second set of fleet of cars for my roofing company? Should I hire a new person, right? The CFO can help you make that decision. A controller is going to give you the data to make that decision, and an accountant is going to make sure the data is correct, and the bookkeeper is going to make sure the data got typed in. So think about where you need, and maybe you need just a little bit of each of those people. And that's if that's your answer, then a company like mine, Fuse CFO, has that entire outsourced finance department, right? We have entry-level accountants who do bookkeeping. We have accountants and controllers who make sure the numbers are correct, who present the numbers to you, and we have CFOs who can help you make a decision based on those numbers. But if you are a small nail salon, insurance broker, you probably need one half of one person. And if you have to hire just a single solo entrepreneur to help you out, a solo consultant to help you out, it's probably somebody who has as high on that pyramid as you can, who's probably a controller or a senior accountant. Now, they got to know QuickBooks, but much more importantly, because anybody can learn QuickBooks, and in fact, almost anybody can get a certification from QuickBooks that says you're a QuickBooks expert, and all you've done is sit down and watch 6 hours worth of videos,
Yeah.
right? You don't really know anything.
So it's like the H&R Block, you got to watch
yeah,
it.
yeah, exactly right. So what
Yeah.
you really want is an accountant, somebody who has an accounting degree, maybe even a master's degree in accounting, to make sure that your books are right. Because I cannot tell you how many times I've seen books that just get screwed up. And here's a quick test. Go home, open your QuickBooks, go to reports, and print the balance sheet. I know that's really scary. Most people say, I don't even have a balance sheet. I don't know what it is. I don't want to look at it. Just print it out. Look at the balance sheet on QuickBooks and scroll down the right side, just looking at the numbers, nothing else. Just look at the numbers. And if you see more than one or two, if you see any numbers that are negative, you do not have a good bookkeeper. If the numbers on the right side of your balance sheet are negative, you do not have a good bookkeeper. If the numbers on the right side of your P&L are negative, maybe you don't have a good business. But that's a different story. If a bookkeeper's doing their job correctly, all of the numbers on the balance sheet should be positive, and they should stay positive, except for probably one, and that is draws. That's the very bottom number, as we've talked about already. When you distribute profit out of the business, that's going to be a negative number on the bottom of your balance sheet. Everything else should be positive. And so many people screw it up because they don't know accounting. They know bookkeeping, but they don't know accounting. And the balance sheet goes sideways. And once there's a negative number on your balance sheet, you have no idea, you have no trust or faith in the P&L numbers because you know your accounting hasn't been done right. So find an accountant who has an accounting degree. And then for taxes, call your CPA, right? Call a tax preparer for taxes, but call an accountant for your monthly account.
Love it. Thank you. That was so helpful. I love a good, tangible, action-oriented test to go do. So huge, huge, huge. And, David, thank you so much for everything that you shared today, explained. I think personally you did it in a way where it was absolutely easy to digest. And for everyone listening, how can they reach you, find you on the World Wide Web, my friend?
Yeah, well, my URL is right there on the screen, and my email, david@fusecfo.com. Yeah, I'm there anytime. Absolutely respond to every email. And there's also a contact us form on our website, fusecfo.com. So happy to help anybody who pipes up.
Wonderful. I love it. Thank you so much. I appreciate you. And until next time, my powerhouses, continue to be courageous.
Thanks, Nicholle.
Thank you. Thanks so much for listening to Becoming Powerhouse. You can find all of the links to our site and resources in the show notes. Let's connect on Instagram at PowHerHouseMoney, and don't forget to subscribe to our newsletter at powerhousemoney.com. Remember, I want to connect with you. I want to hear your thoughts and help you with all the challenges you're having. So engage, send me a DM. And of course, if you're loving this podcast, let us know and go ahead and hit the subscribe button and leave a review.